The NASDAQ closes at its best levels in over a decade. Should you trust this move? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your weekend update for the trading week ending the 3rd of February. So huge moves in the equity markets. Gold gets slapped down, crude oil goes nowhere, and the world moves on. Always remember, don't fight the market, move with the market. Now let's go to the weekly charts and Market Club's Trade Triangle Technology and see what's going on with these markets. So let's go right to the portfolio. And here we are. We're going to start with the Dow. The Dow was up 1.23% on Friday. And we're going to be looking at weekly charts. So here we are, and we have the weekly charts up here already. You can see it's a nice big move up there. We have a plus 100 on our scorecard, which means a very strong trend. You can see the golden cross was back here quite some time ago, and we talked about that earlier with the S&P 500, which we'll get to in just a moment. But this market's put in a very good performance. It's obviously going to look to challenge the highs that we've seen here around the 12,876 level. We're not that far away. I would say probably Monday, if there's no really big changes coming out of Europe or some shocker comes out of Europe, I would imagine this market's going to make new highs on Monday over these highs that we saw back here. So let's see what happens, and let's go to our next market. Let's just scope this out just a little bit further. So that's obviously the big place to look at, 12,076, right around there, 12,876, right around those levels. So we could be over this level on Monday, and that would certainly give us a nice move up, possibly to much higher levels, possibly challenging the highs that we saw back in 2007. So let's see what happens on that one. Let's go back to our next market. And the next market we're looking at is the NASDAQ. This is closing at its best level since 2000. Can you believe that? So it's really got a lot of energy below it. If you just put my telestrator on, so you can see here just the amount of work that's below this market right here. All this market is below here. Just draw a simple line across here, not very effectively, but it's definitely got a lot of energy to push this market higher in the future. I don't know what's going to drive it. It doesn't matter. As I said at the top of the show, don't fight the market, go with the market, move with the market. Very, very key thing to do. So let's take this off the screen, go to our next chart, which is the S&P 500. And the S&P 500 had some very interesting things happen to it this past week. The first of which is the crossing of the, well, this is the weekly, but on the dailies, the crossing of the golden cross. That actually crossed earlier in the week. But you can see our monthly trade trails coming in, where they are. We had this coming in at 1292 on the 10th of January, almost a month ago, practically 3 weeks ago for sure, and we're currently trading at 1344. Excellent close on Friday. These are the areas that we're bouncing up against, and that's going to be around the 1370 area, so another 30 points higher in the S&P 500, and this market will be off to clear sailing to come and challenge the highs that we're seeing back here in October of 07. That's right around, that level's right around the 1576, 1580 level. So let's see how that plays out. Generally speaking, though, excellent close. We're up for the week. We closed the week out with a gain of 2.17%. So you have to be really impressed with that performance. And it looks as though we'll be higher next week, unless there's some dramatic change in the world. And I don't think that's going to happen necessarily. I think the market seems to have its mind set up that it wants to go higher. So let's look at our next market. That's going to be silver. Now, silver was an interesting market last week. As you know, if you've been listening to our daily commentary, we haven't been that excited about silver. And silver actually closed down for the week. It closed down just a modest 0.70%. However, we've had 4 weeks up in a row, and our major Market Club triangle, trade triangle, is the monthly, and that's still down from 33.50. Now, I know the market's at 33.61. I understand that. But unless we see a turnaround in this particular indicator, I cannot get excited about the long-term prospects for silver just at the moment. And it's pretty much the same thing with the gold. If we go to gold, gold got slapped down pretty good here on Friday. It was trading as high as 1763 in the morning, It closed at 17.23, so it's a $40 break just in the day, and it did close down 0.86 for the week. Not a big deal, but again, we've talked about our monthly trade triangles being very key. We think the market is at a cyclic period, high period, similar to what we were here, and similar to what we were here. So I think that's the key thing to look at here. We may have been coming a little bit later, but certainly we are not so excited about the silver and gold market right now. You can see we're at plus 60, meaning we're in a trading range, and it's a different strategy. You want to use the Williams %R and some of the other oscillators we look at. So let's go to our next market that we're looking at. Copper. Copper's a different kettle of fish, so to speak. The copper market's plus 100, very strong upward trend. You can see we've cleared this last area of resistance. This is occurring right around October 30th of last year, and it looks like the market's going to obviously challenge the 4 level, which we've been talking about, and possibly get up to the 410, 420 area. But generally speaking, the trend is very clearly up, and if the equity markets continue to be strong, which we expect they will be, and it's translated into Europe and Asia, then we can see this market going higher. But generally speaking, the trend is your friend, and the trend is clearly up. You can see our monthly kicked in at 3.76. We're 3.90 right now, so a nice profit in that position. And the weekly kicked in even earlier than that. So let's go to our next market. And the next market we're looking at is crude oil. Crude oil really was kind of disappointing in the sense that it did close down for the week, almost 1.82% for the week. However, it came off the worst levels of the week was just below the 96 level, 95.44, but it closed up over 97. I think it would have probably maybe even closed a little higher. I had to give them some more time on Friday. But nonetheless, the market is in a minus 60, meaning it's a trading range, and it needs to have some direction. I think it's still accumulating and gathering strength to go higher simply because our monthly trade triangle, remember with our monthly trade triangle with gold and silver, it's negative. Well, on the crude oil, it's just the opposite. It's actually positive, indicating the potential for this market to go higher. So I give that, generally check that out as a longer-term trend indicator. But right now, the weekly and the daily are negative. So you've got this mixed bag, so to speak, and you want to be trading this with the Williams %R and also with the Donchian trade channels we talk about. So let's go to our next market. Next market is going to be the euro. The euro finally took a little bit of gas on Friday. We closed out the week at 131.58. The market is clearly having problems around the 132 level, and we are now in a minus 55 area, indicating a trading range. So I would not rule out the possibility that this is the type of action we saw, which is basically a 4-week rally from the lows, very similar to what we are here, 4 weeks, maybe have one more week, and then I think we'll eventually turn down. I think the euro, the longer-term trend for the euro, as destined by our monthly trade triangle, still remains negative, indicating this trend is clearly down. And if one scopes this out even further, you can see that the trend, this is in our opinion, a counter-trend rally. So you have the move down. Just looking at this very quickly, here's the move down. We have a counter-trend rally, move down, counter-trend rally. I think we'll have one more down, which will take it below these lows, and I think that's going to take us probably closer to the 120 area, maybe even below that. But generally speaking, I expect one more push down in the euro. It's not out of the woods by a long shot, and the major trend, as defined by our monthly trade triangles, remains negative. So let's clear the screen, and let's see our next market. The next market we're going to be looking at is going to be the dollar index. Well, this is just the reverse, of course, because we are looking at a minus 55. We're expecting to see this market go higher, so that sort of stopped. It's really tracking the euro very, very closely, I might say this. So we think this is just a pullback in a longer-term bull trend for the dollar. Now, whether that plays out, we'll have to see how it works out, but nonetheless, it's a minus 55, indicating a trading range. We've had a doji top right here, and possibly a doji bottom. These really kind of defines turning points sometimes in the marketplace. So let's pay attention to that and see how this works out next week. But generally speaking, I think the equities are going to be the star next week. and that may make a lot of money come back into the States and back into equities, which means they'll be buying dollars. So we'll see how that plays out. But next market we're looking at, and this is going to be, I think, the last market for the day. Let's just take a look. Yes, it is. And this is the CRB Reuters Jefferies Commodity Index. Now, again, this market's a plus 55, so that's not a good thing. That's a trading range indicating a flat market. You can see this market's really been flat for a while. We did expect, once it went over the 316 level, which it did last week, the week before I should say, then basically we thought that was a turn, but it really never played out, mainly because of our long-term monthly trade triangle is still negative at 335.10, the market's at 314. So the market has to do more work in my opinion, but generally speaking, I think we'll see inflation kick back in. I don't think we could print all this money and not see it kick back in. But again, that's just a feeling. We're going to let the market tell us what it wants to do as opposed to trying to figure out what we think it should do. And that's one of the keys to being successful trading, folks, is basically don't fight the market, move with the market. Hey, this is Adam Hewison for the weekend update for Market Club. Thanks for stopping by. Have a great weekend. We'll be back on Monday with our midday market update, and it should be a fun week next week, so stay tuned.